today, and I will be joined by two fabulous speakers, and I will be the third speaker. But before we get started, let me review a few housekeeping items. The webinar will be about 1 hour, and we will talk for about 40 minutes, and then we'll have a Q&A session. The webinar is being recorded, and yes, you will be able to get the recording afterwards. So I'm going to hand it over to Bill Macbeth to show you how to use your controls.
Yeah, so you should see something like this on the screen that we're showing right now on the right-hand side of your screen. It might be a different color, or it might be shrunken down to the right and be just a little box that appears like that. If you want to get it back, click the two left-facing arrows, and that'll re-enlarge it so that you can ask questions. Now, if it's in the way of something, you can also move it by clicking on the bar of the big box or the little box and dragging it around to get it out of the way of what you want to see. If you want to ask questions, there's a question box below. Oh, sorry, one more thing before that. If you can also reshrink it back down by clicking the two right-facing arrows. So to ask questions, you might not see the full question box, in which case, instead of the minus sign that's shown there, there would be a plus sign. Click the plus sign and it'll expand, and you'll see the place to ask the questions down below where it says enter a question. Type it in there, click the send button, and it'll appear in your question log. You can submit multiple questions throughout the webinar. You don't have to wait until we answer your questions. In fact, we're not going to answer questions until the end of the webinar, but go ahead and keep submitting them as you think of them, and if we don't have time to get to all the questions, we'll do it at the end of the webinar. So I'll hand it back to Ann now.
Great. Thanks, Bill. I'm really pleased to have two great ChainLink team members join me today on this webinar. Bill Macbeth, many of you know, is our Chief Research Officer. And I'm really delighted to introduce you all to our new team member, Scott Stelter, who joined ChainLink last month to lead our RFID practice. Scott Stelter is a leader in the RFID industry. During his career in the RFID industry, he has held senior positions at Impinj and Alien Technology, both influential innovators, as many of you know, in the RFID industry. He has tremendous in-depth knowledge to share with both end users and technology professionals. Next slide, please. So for our agenda today, we are going to really scratch the surface of the discussion about RFID in the market today. First, we're going to provide you some insights and observations, and then we're going to dive into the numbers and talk about specific numbers and market growth in certain categories, and talk about what's driving the market today. We're also going to take a peek into the future. And then we're going to discuss the implications for the end users, vendors, and investors who all have obviously a special interest in RFID. And then I'll wrap up and talk about our future agenda and webinar series we're planning. Next slide, please. So now, Bill, take it away.
Thanks, Ann. So a few observations from our research and from talking to lots of people in the marketplace. I think it's no secret that a big growth has been happening in retail RFID. It's, quote unquote, in the tornado in the sense of having crossed the chasm and the early majority now being adopted. We still see a lot of headroom for growth over the next several years, really due to a couple factors. One is relatively low penetration in retail. A lot of retailers haven't started yet who are really appropriate, as well as some retailers who have started but haven't tagged all the categories that make sense to tag. The second one, and this could be a big one, is general merchandise. We've seen Marks & Spencer's announcement, actually a couple of years ago, that they're going to tag all of their general merchandise by within the next couple of years. And so if other retailers follow suit for that, that will just continue to drive this tremendous growth as well, really for several more years to come, perhaps even through the end of the decade. So the next thing, I want to talk about this killer app question, and this keeps coming up, especially from solution providers we talk to. They all say, okay, that's great, retail took off, what's next, right? What's the big thing that's going to explode? And one of the points I want to make here is we don't really need another killer app to have a healthy industry. I'm not saying it wouldn't be great. That'd be great to if another area took off like retail did. But there really are a lot of other mature sectors that we're seeing steady and healthy growth in besides retail, and things like asset tracking, manufacturing, even old things like toll collection and contactless cards, libraries and so forth. They're still doing well, and so none of them are seeing the kind of explosive growth we see in retail, but the industry is really coming along nicely from that perspective, and nothing else is jumping out as an obvious what's next. Some people were talking about item-level pharma on a mass scale. That was actually a few years ago that discussion was happening. It looks like 2D barcode is going to be the thing for the foreseeable future on an item level for pharma. So we'll continue to keep our eyes open, and will be part of our research of us seeing, is like an area that's going to really explode as retail has. So I want to talk about Internet of Things. This is something that keeps coming up, and we believe it's going to be a huge catalyst for growth for RFID. Some of the purists, they say, well, RFID does not have, an RFID tag doesn't have an IP address, so it's not part of the Internet of Things. We think that's a real technical nit. If you have essentially a gateway, which is your RFID reader, you're on the Internet, right? So the RFID is clearly as part of the Internet of Things phenomena. The term was actually coined to describe RFID in the beginning. And this phenomena, the technology phenomena has been happening for like decades of building up to the, and the trends and so forth, building up to what we have now. It's really, the marketing buzz is what's new about the Internet of Things. And it's similar to what we heard in cloud a few years ago, which is still kind of going on, but that big, everybody was talking about it kind of thing, and actually people kind of get sick of it, but even end users, even if they're tired of hearing about it, after they hear IoT a million times or Internet of Things, they start to think, well, gee, maybe I should be looking into this. And in the investment community and solution providers alike start to invest more into it. So we really think that's going to give a bump to RFID growth. Now, the other thing we see, and I don't want to overstate this, but there are pockets of people who still have these outdated views of RFID. People in the RFID community are really aware of how things have changed, but some end-user professionals, whether in retail or other places, who have not really closely followed developments, we actually still hear people referring to the failed experiment of Walmart with pallets and cases, and it's too expensive and things don't work well. And they really fail to recognize that there's tremendous growth in item-level retail and the tremendous progress we've made with the reliability of the technology, the ease of implementation, and the drop in prices. So we continue to try to educate the market to make sure people are aware of those things. Now, regarding application-specific readers, there's been this gradual shift. If you go back, many years ago to the middle of the 2000s, mostly the readers that were available were your standard issue 4-port fixed reader and a couple different varieties of handhelds. And we've seen a growing trend towards making readers that have features and functions aimed at a specific application. And for part of this, it's just a growing sign of a maturing market where the applications are now big enough, the application segments are big enough to support that specialization. But it's also a sign of the reduction in cost and the availability of off-the-shelf chipsets, and also design kits that really lower the barrier for building new types of readers that are specific to a smaller segment of the market. One early example was the differentiation between readers that are in a DC versus a retail environment, where in the DC you want, this big, rugged, thick box that's made to take a hit with a forklift. And in the retail, you want something that's slim, unobtrusive, and it fits in with the aesthetics of the retail environment. We've also seen tremendous diversification in the handhelds. You might have in the DC a high-end ruggedized handhelds, everything down to a pencil-thinned wand that's used for things like jewelry. Specifically in retail, where handhelds have been super dominant, I mean, almost all the retail, there's very few retailers using anything but handhelds for RFID readers. We're seeing signs that that might be starting to change. We see innovations like steerable beam ceiling readers that have a pretty big range, but also have the location functionality. Can tell you where items are. That Impinj came out with one, and a couple others. But also financial innovations to try to help with to reduce the burden of the upfront capital costs, like RFID as a service. So instead of an upfront cost, you've got a monthly fee that helps retailers decide that maybe they can handle putting those in. We've seen things like readers built into tag attachers, like the one being used at Zara, that recent Tyco announcement. Shelf readers they're not being used in a big way yet, but prices are coming down, and maybe for specialized areas like jewelry, we see some very interesting designs for those. And even something, it sounds wacky at first, but this company that's putting RFID readers on drones, and the idea here is, when the store empties out at night and nobody's in there, you send the drone up and down the aisles, and you get something, you get accurate reads that are better and more reliable than having people do it at a lower cost, and it's actually cheaper than putting a bunch of readers in the ceiling. So we see all of that coming. Now regarding cloud is cloud and RFID go together well, right? And it's increasing importance. And cloud is really the architecture of choice, particularly when you have applications that span across the supply chain, and you've got multiple parties and multiple sites, and it just makes it way easier to hook all that up into the application. It also helps because it lowers implementation costs, and you can do rapid implementation when you don't have to put up all that hardware yourself. And the last point I want to make here is, and this is not from a formal survey we've done, but more just our observation in talking to vendors, is that people who have vertical solutions that solve a specific problem are doing better than those that are taking a more horizontal approach and just saying, whatever problem you've got, we'll fix it for you. So those are a few of the observations, and I think with that, I'd like to hand it back to Ann to go over some of the market numbers.
Great. Thanks, Bill. Next slide, please. Yeah, here we are. History lessons can be instructive to the future, and of course they're fun to look at as well. And no doubt this chart may look a little UHF-centric, but I think it's instructive to understand what has to happen in terms of technology, price advantages, in order for markets to grow. But I think most importantly is the validation of powerful use cases in target market segments that have almost unlimited growth potential. And UHF obviously has caught the wave, if you will, in retail apparel, but we don't think that's the only segment and the only opportunity for staggering growth for RFID, as Bill mentioned earlier, and we'll talk further about some of the other catalytic market opportunities that are coming along. But just one or 2 points about history, and we'll move on here. I mean, we were all hanging our hat on Walmart back in, the turn of the century, if you will. Sounds like ancient times. But the good news about that is it really catalyzed investment. It catalyzed interest in the market. And although the Walmart story maybe was a little bit disappointing, it actually brought a lot of people into the market who then had to confront this situation, retrench, and ultimately find more sustaining paths forward. And the good news for the industry is we've weathered that, and that has brought us into much better high-performance opportunities in a lot of industries. Those high-performance things are, for example, lower-cost tags, software applications. Of course, Gen 2 now has multiple versions. As Bill mentioned earlier, and Scott's going to talk about, new reader technologies, et cetera. And we're predicting explosive growth for RFID. You talk to a lot of analysts, and there's some debate who's going a little wild on this, who's holding back, and and more conservative, but we've been talking to a lot of end users, not just solution providers, about their rollouts of RFID. And the one fact which is very impressive is the compression of implementation time that is now happening in retail. You know, in the past it was make a decision, pilot for years, and then take several more years to roll out. And what we're seeing now, as many of you are aware, is very compressed implementation times. For example, Kohl's rolling out RFID in 1,000 stores, all blue jeans, 6 months. And that's the kind of stories we're starting to hear from a lot of retailers rolling out across the chain in much faster cycles. So that's really good news for the industry, and therefore we're forecasting much bigger growth. So let's look at the numbers. Next slide, please. So here you see we're going to show you passive and active numbers as well as readers. So here you see a couple of facts jump out at you. Number one, yes, UHF from a volume perspective certainly shows bigger numbers. But this slide doesn't really tell you the whole story. Firstly, this is a unit count, and it doesn't really show you the dollars. So this slide does not really depict the retail price that everyone is paying for tags. And as we know, there are a lot of specialized tags out there. So we're not just talking about 10 or 20 cent tags. Often we're talking about multi-dollar tags, up to $10 tags for certain business applications. And so from a financial perspective, the picture is a bit rosier than just looking at unit counts. A couple of other things I want to point out on this chart. If you look at the battery-assisted passive tags, firstly, it appears to be a low volume. But we expect this market to grow as well for a couple of reasons. Firstly, again, we talked about the cloud and business applications. Active tags are information rich, which means they can travel with the asset, sometimes for the life of the asset, and provide and support a host of business applications with ongoing intelligence about the assets, the environments, et cetera. And that just really helps catalyze the software applications that rely on that. The second thing is battery-assisted passive is also encroaching on the active market, and we'll talk about the active market in a second. But what that does, that gives the end-user buyer more options when it comes to thinking about, can I have an active experience, if you will, at a much better price point? And the answer turns out to be yes. So ultimately, we're going to see that needle moving up on the battery assist as well. And the other thing about a battery assist, unlike active, is often they can use the standard readers in the market. Not always, but they often can. Now, another area we expect to grow over time, and we're just starting to see some big orders here, is the sensor-based RFID. Again, Internet of Things, more local applications that require fine-tuning information about vibration or temperature, and we're all familiar with those. But we're starting to see a lot more interest in that, especially on the passive side, because, again, it can be generally read by readers out there, and the price point is so much more attractive. Next slide. So what this slide shows you is all frequencies, and here we're looking more at use cases and industries. And you notice now, in the context of the whole picture, retail is certainly a phenomenal, healthy portion of the market, but you really see a lot of other sectors kind of jump out now more at you. You're seeing more and more public transportation options globally. As organizations think green, governments think green, more people taking public transit, et cetera. So you're seeing these kinds of tagging options, if you will, security, vehicles, et cetera. And a lot of these are disposable tags, so they keep the market bounce moving forward, if you will. And that's a very good sign. The other thing I want to point out is this isn't just a UHF story. No doubt we have the battle of the frequencies going on in the background, and the UHF community, of course, has been investing in organizations such as RAIN to catalyze UHF adoption. But the reality is that HF has a lot of important, powerful applicability. And of course, recently, of course, Android has started putting NFC in their phones. And the rumors are swirling. Maybe this time Apple will do it too. Next slide, please. Now here, we're kind of looking at the active market from a couple of perspectives. You know, the active market is not looking so lively lately, and that is because we're really going through a transformation in the market. And if you could do the builds, please, there. The first thing is we have these competing technologies, which I talked about earlier, which is obviously battery-assisted, but we have Wi-Fi tags, we have cellular, and RFID. And so the market is kind of sorting that out. But what's really important here over the long haul, and why we've shown this steeper incline, is the Internet of Things and business applications catalyst. So we see a lot of the future active market being driven more by the applications. You know, in the past, active was traceability, ocean containers, and you kind of had two choices, 433 or Wi-Fi tags, and they were very, very restricted. Powerful and meaty applications, but very restricted to a very narrow audience. In the new world, we're seeing an explosion of audiences from healthcare, manufacturing, energy, you name it, who want to take advantage of the properties of an active-like technology, but in terms of the business application. So now I will turn the next part of the webinar over to Scott.
Thanks, Ann. Hi, everybody. This is Scott Stelter. This slide shows the long-term trend in pricing for fixed general-purpose UHF readers. For a long time, for the most part, all you could get were 4-port readers. The volumes weren't big enough to support any real variety. So to implement different use cases, you just attached a different antenna to the same reader. This meant that no matter what you were doing, whether it was a dock door or a desktop, it still cost $3,000 or more for the hardware. Obviously, this wasn't very good for adoption. At the beginning of the Walmart mandate back in 2005, these readers listed for between $2,000 and $2,500. And by the way, not shown are some outliers. There was at least one reader that went for almost $4,000 that had a hard drive inside. The readers were generally big and clunky. They ran hot to the touch, and some weren't very reliable. So a lot of things have happened since then. Prices have declined steadily at about 9% per year for the mid-range. And now you can get a pretty good 4-port reader for as low as $900 list price, and that means that the channel price is going to be lower than that. And you can get really good readers for a few $100s more than that. Also, performance, reliability, features have all improved dramatically. Readers are now a lot smaller, much more reliable. They consume a lot less power. In fact, some consume little enough power that they can run on basic 15-watt power over Ethernet, which is really important because it means you can, in many cases, eliminate an AC power drop, which can add $200 or $300 to the cost of an installation. There's also another trend layered on top of this steady improvement. Since volumes are increasing, reader vendors can now support much more variety in terms of form factor and divergence in terms of price performance. So instead of adapting 4-port reader with different antennas, now you can buy a reader optimized for your application that might be suitable for your app at a much lower price. So for example, at the low end, you can get a USB connected, one tag at a time dongle reader, looks like a mouse, for really $200-300 list. But at the high end, you can get a super ruggedized vehicle mount reader that can be, you know, attached to a tank for a lot more money. So that you can also get process automation readers, for example, with native interfaces for programmable logic controllers. You can get, I think Bill mentioned earlier, RFID-enabled tag detachers for EAS, RFID combo tags, ceiling-mounted readers with steerable beams, and so on. So there's enormous variety that creates a lot of range in pricing, performance, and features. And that divergence is shown on the chart in terms of the dotted lines. All right, let's take a look at the numbers. In 2014, we estimate as many as 500,000 things will be made that can read UHF tags. More than half of these are going to be fixed or handheld readers in all of the variety of different shapes and sizes that we've been talking about. And there, of course, will be a few thousand, probably a few tens of thousands of printers as well. But an increasing number won't even be RFID readers per se. Instead, there'll be products or systems with RFID embedded as a feature or an internal function. And of course, the term for this is embedded RFID. A great example, if you've ever used a Coke Freestyle soda fountain at a Taco Time or a Five Guys or some Burger King stores, you've run into one of these soda fountains. In the Freestyle soda fountain, flavor cartridges are tagged, and they're read inside the machine by an internal reader, and this helps Coca-Cola manage quality and replenishment. Here's another example. Imagine a fleet vehicle company that leases $200,000 semi-trucks to clients. To protect their investment, they want to make sure that replacement oil filters and other replacement parts used by clients are all the right type, the right quality, and so on. So the filters are tagged, and the vehicle has a reader system under the hood so that the truck can read the oil filters installed in the engine. The truck is connected to the internet via cellular or satellite, and so as a result, the asset owner can check on them and make sure that the right parts are installed in the truck. So this is an embedded RFID application, but it's also an example of consumables authentication, and this is also an example of where RFID and the Internet of Things directly overlap. So we'll talk a little bit more about that soon. Our mid-range scenario, the blue scenario, assumes that growth in traditional fixed and handheld readers continues as it has been, with maybe a little bit of acceleration due to retail. That'll get you to about 1 million UHF-enabled devices by 2016. But if embedded RFID takes off, you're going to see the high scenario, which means something like a couple million UHF devices by 2016. And it will continue past 2016 at rapidly escalating rates. All right, now let's take a look at how the value chain is put together. So this is a diagram that shows the UHF RFID ecosystem. What you're looking at the top of the page there is the tag value chain. By the way, I just want to say the companies that are listed are just meant to be examples. This is not meant to be a complete list. I don't want anyone to think that they're being left out for any material reason. It's just a list of examples to try and illustrate given boxes and categories. We can provide you with a report with a complete classified list of companies in the ecosystem. Let us know if you're interested in that. All right, tag chips are used by manufacturers of inlays and hard tags. So we'll look at the inlay path first. Inlay makers like Avery and SmartTrack buy chips and attach them to antennas made of metallic foil or conductive ink or some other material to make an inlay. Some companies sell branded inlays, and others like Horizon provide unbranded manufacturing capacity. In other words, they're contract manufacturers to these branded inlay vendors. It'll be very interesting to watch the interaction between inlay brands and contract manufacturers over the next couple of years to see where the majority of the value add lands. There's a certain amount of vertical give and take going on right now in this industry, and it'll be really interesting to watch. I've lumped converters and service bureaus into a single box. Of course, they're really they can be different, but a lot of converters are service bureaus. A lot of service bureaus are converters to some degree. These folks use inlays to make labels, tags, retail trim, cards, and of course other consumable RFID tags. And again here, as you can see, there's some vertical integration going on. Some service bureaus have their own inlay manufacturing capability. Service bureaus encode and print tags. The printing can include a lot of variable data like pricing and SKU numbers, which can be very complicated to manage, especially when the company's trying to provide fast service, 24, 48-hour service on a global basis. A lot of the cost of a tag, as a result, is incurred at this step because a lot of the value is added at this step. All right, this is the chain that delivers readers to the market. Often, but not always, they start with reader chipsets that are made by people in the first box on the left. So you see there AMS, Impinj, and PHY chips. Reader vendors like, Alien, CSL, Deister, FIG, Motorola, or now Zebra, I guess, TSL, Impinj make readers which are sometimes sold through value-added resellers. Because these VARs rely on RFID expertise, I call them horizontal AIDC VARs, or HAVARs. HAVARs self-identify as RFID experts, and they build semi-custom solutions on top of proprietary software platforms. Now I've added what I call vertical solution providers, or VSPs. These guys are different from HAVARs in that they're highly specialized in a vertical. They have deep domain knowledge in that vertical, and they deliver a complete solution to clients in that vertical. They don't identify themselves as RFID experts generally. What they do is they identify themselves as domain experts. This isn't a hard and fast rule, but we think, and I think Bill mentioned this, we think that VSPs are generally more profitable than HAVARs. Domain expertise seems to provide some differentiation and higher margins to VSPs than HAVARs are able to produce. And we'll have to watch that and see what happens. I have noticed that some horizontal AIDC VARs have evolved into vertical solution providers over time as they've gained domain expertise in a given area. All right, now the chart shows the big enterprise software and system integration firms, and as rollouts get bigger, RFID rollouts get bigger, firms are often going to head up, these firms are often going to head up projects as prime contractors. And so for those of you who are familiar with the VA healthcare asset tracking initiative, you know that both HP and IBM were competed as primes for that project. And finally, I've added a new category from the Internet of Things. These are Internet of Things platform companies. They provide software development platforms or cloud services for connecting devices over the Internet, and often they provide both. Most don't do much yet with RFID, but they will, because to most of these companies, RFID is just one category of an edge sensor device, as Bill was mentioning earlier. You'll notice at the end of the list with their new Zatar platform, Zebra is now a member of this group. All right, so now let's take a look at innovation. All right, innovation is not slowing. There's a lot of activity in innovation in RFID, and a very important focus area is aimed at reducing the total applied cost of a tag. Historically, there's been a lot of focus on the cost of the chip or on the inlay, but as I said a minute ago, by the time the tag is printed, encoded, and applied, there are a lot of opportunities to add both value and cost. So a lot of people in the industry are working hard to reduce cost in those areas, and they appear in several subcategories. First, most of you have heard of chip-based encoding, in which the TID, the tag ID number, is used to create the SG10 serial number. There were a lot of announcements about this a year to 2 years ago, but it's really just now becoming commercially accessible thanks to newer RFID printer encoders, and also a variety of industrial personalization machines from companies like Mullbauer that do high volume encoding and printing. There are also new chips with features to help ensure reliable encoding and easy verification of accurate encoding, and from companies like NXP and Impinj. Finally, there have been innovations recently in die attach. It turns out it's very difficult to attach a 400 micron die to an inlay without breaking it, and there have been innovations designed to make the attachment process both more reliable and also less damaging to the chips. And this work has involved a lot of collaboration between chip vendors, machine manufacturers, and glue companies to get the recipe for this right. For more detail on this, you can read an article on our webpage on Impinj's recently announced R6 chip, which has examples of several of these features in all of these areas. All right. More and more RFID software is now delivered as a service, or SaaS, or software as a service. At RFID Journal Live, an informal survey found that over 60% of vendors had SaaS versions of their software platforms. This was up significantly from the previous year, and I predict that by the next show, it'll be almost 100% of people who will offer a SaaS version of their product. Obviously, SaaS enables a pay-as-you-go model. It's less expensive for end users in terms of upfront costs, but it's also much easier for vendors to manage. So it's very attractive for everybody, which is why it's sweeping the industry. And except for high security applications like banking and homeland security, SaaS should rapidly penetrate most RFID implementations. All right, tag sensitivity. So the last couple of rounds of new chip introductions have significantly bumped tag sensitivity up. This is an issue that we've looked at every year. Everybody's been watching this for 10 years, but this year is different. With the last couple of tag chip releases, we've reached an inflection point because the chips are now so sensitive. For a long time, the chips were the limiting factor in the performance of UHF RFID systems, but now the chips are so sensitive that even if the tag turns on, the reader might not be sensitive enough to hear it. And what this means is that the readers with high sensitivity numbers in their specs will now begin to show noticeably better performance than readers with lower sensitivity numbers in their specs. In other words, a lot more performance daylight is going to start opening up between readers than there used to be. And so solution providers should start to evaluate readers on that basis. Also, very importantly, more sensitive chips mean that tags can be smaller, which is going to lead to lower tag costs. All right, what's coming next? Gen 2 V2. Version 2 of the Gen 2 spec was ratified over a year ago at the end of 2012. And though most vendors will say that their current products are Gen 2 V2 compliant, there aren't really any commercially available products yet that use any of the new crypto-based features of Gen 2 V2. The original Gen 2 spec supports really limited security, password security, permalock, that kind of thing. There's no robust way to protect against cloning of a tag, though, which makes a lot of applications involving financial transactions out of reach for UHF Gen 2. Gen 2 V2 will enable robust crypto-based authentication of tags by readers, which will enable many of those applications. And it doesn't have to add a lot of chip cost because this is a very important point, only a very small subset of the optional Gen 2 V2 feature set is going to be required for tag authentication. So if you're not implementing the whole Gen 2 V2 feature set and you're just trying to do robust authentication of a tag, the added cost is not significant at the silicon level. There is one important note, though. If you implement a system like this, some authentication authority is going to be required to authenticate the tags. So it'll be interesting, in other words, some cloud service, for example. So it'll be interesting to see who ends up providing this added service and what it'll cost and how that revenue will be recovered by that authority. The Gen 2 V spec, of course, if you're familiar with it, also provides a lot of optional memory security and access privileges, really complex stuff, file access privileges and multi-user privileges, and of course these optional features can add a lot of cost if you implement a lot of them. So we'll have to wait and see what applications will be built on those features. All right, let's talk about fixed infrastructure. Right now, handhelds are the primary reader for retail. They get the job done, and the startup hurdle is relatively low. Of course, one limitation of handhelds is that the results depend on employee training and compliance. Fixed infrastructure is not affected by employee training and compliance issues and could provide a rich stream of data that can be mined for lots of information that can be used to improve store ops, customer service, and predict store performance. The ability, for example, to detect different levels of activity in certain parts of the store can be delivered by fixed infrastructure, and that can be valuable in those areas. But it's expensive. Filling the ceiling with 4-port readers could be very expensive. In one small store under 10,000 square feet, I counted $40,000 worth of hardware in the ceiling. So as a result, there's a lot of work, a lot of innovation being done to try to cut these costs of installed readers, fixed infrastructure readers. At one end of the spectrum, people are looking at smarter readers with steerable beams that will enable a smaller number of readers to be used. At the other end of the spectrum, however, some people are looking at using a larger number of cheap readers, dumb readers if you will, that in order to provide the density required. So we'll have to watch both trends. This is an old tension, and ChainLink is in the process of writing a report on hardware economics that will try to shed a light on some of these issues. And Bill, I think I have drones listed there. Bill mentioned this. I won't go into it in great detail. I'll just say that, believe it or not, there are some good reasons why this may actually make sense, so suspend your disbelief. And you might take a look at a video entitled Flying Robots on YouTube for more info, a video produced by Adasa. All right, and then finally, RFID as a service. Not all innovation comes out of the lab. This one comes out of the CFO's office. Some vendors are experimenting now, this is already happening, with RFID as a service, in which the vendor owns and operates the hardware and sells the data to the user. This reduces the upfront cost and risk for the user and should help drive adoption. I believe it could be a good way to drive very rapid adoption, especially if it starts to get used in retail. Some users are doing this now, and I'll give you one example. For example, in Pakistan, the DoD now buys RFID supply chain data from a service provider who owns and operates readers. All right, I'm going to go back to Ann now with some discussion on implications for users and vendors.
So actually, this is Bill. I'm going to cover the users and Ann the vendors. So starting with retail, we've seen this. There's been incredible growth. It's really driven by this financial ROI. But it's only for certain categories. If you're, for example, grocery does not have that those characteristics. But the characteristics of high ROI are really high mix complexity and decent margins. When you have that combination, there's this big ROI, and high mix complexity, I mean, would be like size, color, style in apparel, or different shades in cosmetics, things like that. And the reason is because they're hard to replenish. You know, you think about the wall of jeans, right? And you can literally have over 1,000 different size, color, style combinations in a wall of jeans in a retailer. And no human being, you know, no matter how attentive and how well trained they are, can do that without making mistakes. So you end up with out of stocks, and out of stocks translates into lost sales. And retailers have been seeing in the range of 5 to 15% sales uplift in categories. Again, it depends on the category and their out-of-stock rates and so forth. But that makes an extremely compelling business case. And you know, retailers who aren't doing it today and have those kind of categories really should be looking at this. I remember one chief supply chain officer from a major retail supply chain who told me when he first was trying to get RFID going, it was like pulling teeth to get investments. But once they got pilots in a couple stores, the board's only question was, how fast can we roll this out to the whole chain, right? And which brings me to the next one, which is the rollout efforts. When you have a large chain, don't underestimate them, because you know, there's a lot of moving parts and systems that need to be integrated, and the change management with associates. I think we've mentioned this a couple times. If they don't know technically how to operate the equipment, but more importantly, they don't realize the critical importance of this task, that you won't get the types of inventory accuracy gains that you need, which are so critical to reducing those out-of-stock rates. The other thing we've seen is that a lot of retailers end up tagging themselves. They have a hard time, you know, twisting the arm of their supplier to get them to tag. It's not just about the cost of the tag. It's also about the cost of labor to apply it. And the exception there is, of course, private label retailers who have much more control over their supply chain. They tend to be able to get those things tagged at the source by their suppliers. And that's really critical to be able to get benefits in the supply chain. Very few of the current retailers are actually using RFID in the supply chain, except for some private label, mostly European private label chains. And what they're doing and is they, as I mentioned, tagging at the source, but you have to get your suppliers to change their processes. Otherwise, and what I mean by that is use that RFID tag to verify that you're picking, packing, and shipping the correct items and quantities. And then using it in your DCs to verify that you're receiving the right quantities. And once you do those things, you start to squeeze errors out of your supply chain and see tremendous benefits. And I think, you know, one of the things regarding suppliers, this question is being asked, you know, a little more often is, will we reach this tipping point where suppliers decide, hey, I might as well tag this myself. I'm already tagging 60, 70% for my customers who are demanding that I tag. Why don't I just tag the rest of them? But I think more to the point of the tipping point is not about the percentage, but about the supplier's ability to realize an ROI. And our hypothesis is here that one of the places that is a reduction in chargebacks. And so the idea here is, you know, if you're sending, you, the supplier, or the vendor are sending the wrong quantity or the wrong items, you get dinged. You get charged for that. And those chargebacks in total can represent 5% or more of a supplier's revenue, just an incredible amount of money. And of course, a lot of those, many of those are not due to the wrong items. It could be using the wrong carrier, et cetera. But some portion of those can be addressed by RFID. So we believe, and we're going to be looking into this more, that there's some ROI there available. And we do see even some industry-wide outreach efforts from GS1 and others to try to educate suppliers and get them on board so that they'll see the benefit in actually tagging themselves. So the next slide here is about manufacturing and the implications for manufacturing. I think the first thing is that this sector, if you just look at tag counts alone, tends to get undercounted, and that's because a lot of the applications are closed loop, using a hard tag in a factory that gets reused literally hundreds of times. And so when you just count tags, you're missing the revenue that's being caused by readers and software. These tend to be reader-intense environments. So that's just one point about it. And it's actually a very mature section or segment, if you will. A lot of the use cases I list here have been being done literally for decades. A lot of asset tracking of reusable containers and components and tools. We see, Stanley Black & Decker's had this line of tools with built-in RFID tags for keeping track of who's checking them in and out. Visual RFID, this was something we've seen from OmniID in manufacturing, some automotive and appliance and other manufacturers, to replace the sheets of paper that get stuck on the side of the auto chassis or the washing machine chassis that travel with it. And a lot of that is to support mass customization. You think about an automobile, each one is actually unique and being built with a specific set of components. And you want to make sure that the feeder lines are adding exactly the right components and so forth, and that the right steps are being done by the worker and that thing. We've even seen some item level process control, the ability to adjust by item some of the settings in your equipment and so forth, or at least read what they are, and more RFID readers being embedded into the production equipment. Now, I mentioned the majority of the applications are closed loop today, but more and more manufacturers are looking at the so-called open loop, or where you put in the tag and it goes out into the world, right, with your stuff. And that is being driven also by the Internet of Things phenomenon, as Scott mentioned, to put more intelligence and functionality into the products, or to protect the brand. We're seeing people looking at sewn-in labels in handbags or clothing and so forth, or to make sure that you've got the right spare parts and the right consumables being used. And that last one, it's partly a quality issue, but to be honest, it's also a revenue issue. A lot of companies like Keurig makes this coffee maker with RFID that will only use their coffee cups and so forth in it. Now, I don't want to overstate this last point here, but I do, because it's kind of, a lot of manufacturers are in the put the toe in the water step in terms of building RFID into their products. But it is happening, and I think it will be accelerated by the Internet of Things phenomena. So now I'd like to hand it off to Ann to talk about implications for vendors.
Right, thanks, Phil. And we're going to pick up the pace here quite a bit on this, so we have time for questions, if you can move along. Okay. Okay, everybody knows that. Cloud is a big catalyst for RFID. Again, it's about the information and how it gets used. Next slide. And of course, we all knew the applications also have to be industry specific. Well, everybody knows that, don't they? Next slide. Well, it turns out not everybody does know that. And it is an amazing fact that technology markets seem to all go through this same process of going from kind of focused on technology, speeds and feeds, features and functions, and a lot of focus on price and cost and those kinds of things. And end users, of course, often get caught up in this, but they're really looking at the feasibility of this technology and applying a lot of vision. And again, we all know these trends as we go from a product orientation to eventually thinking about an end solution. But I think the implications here, we could talk about this discussion endlessly, and we do have a report that talks about the evolution of the market to where it is today and who are the catalyzing players, investors and users, et cetera, and what their role is. But I just want to focus on a couple of lessons for vendors here. First, we're relearning the lessons of history. We're moving into a solutions era now with RFID. And what does that mean? We have new players entering the market who didn't have a presence before. And those new players have a lot of sway with the end user market. They've been in those end user markets selling solutions before. And that means if you're a device company, or you're an inlay company, et cetera, or you're integrating piece parts, you need to either evolve to that or align with those kind of players. Obviously, we have expertise issues. If you're a device company, you're good at devices, and if you're a software company, software. But what we're talking about here is the emergence of new kinds of partnerships. We've seen some old players exit the market or get bought out. We've seen new companies emerge. And what ultimately is happening is creating a healthy but much different market than the entrepreneurs who created this market really envisioned. And examples that were talked about earlier is a Stanley Black & Decker or PTC, who now owns Axeda and ThingWorx. So what that means for most of our attendees today is don't resist. Join the evolution that's going on here, because again, these new types of partnerships are really going to open the door to much bigger deals and a much richer set of high-power use cases than we have today in the market. So next slide, please. And I think, Scott, you're on.
Okay, thanks, Ann. All right, no discussion about investment in RFID can be had without a little bit of context on the Internet of Things. So quickly, what is it? IoT is just the name we've given to what you get after 25 years of convergent evolution affecting the Internet, wireless communications, cheap processors, cheap memory, new lightweight communications protocols, sensors, and other technology areas. The term originated in the MIT Auto ID Center. It originally referred to RFID. Some of you know Kevin Ashton, who coined the term way back in the beginning. But now it refers to the IoT, and RFID is part of the IoT. This is a diagram showing a typical high-level view of an Internet of Things architecture. In this context, the RFID reader, as Bill mentioned earlier, is just a gateway. You see your truck and your oil filter at the top. This is a typical Internet of Things application where a user on the right can use the connection to the device inside the truck to monitor what oil filters are being used. There's a lot of major investment going on in the Internet of Things, and I won't dwell on all of the text here except to point out that both Intel and Google have now lent their participation to RFID specifically by being founding members of the RAIN Alliance. And if you're not involved with the RAIN Alliance, I recommend you look into it. It's going to be a very effective organization for promoting standards and interoperability and marketing of RFID, kind of analogous to the way the Wi-Fi organization did the same thing for the 802.11 standard. So for investors, here are some signposts. First, the global RFID business is founded on a solid, diverse, growing base across many, many verticals, and I've listed some there. Second, on top of this base, retail is in the tornado and is showing exponential growth, and it's helping pull things along. And so this growth, of course, is driving innovation and reinvestment. And then we have our coordinated ecosystem where a lot of the issues associated with IP, patent issues, standards issues are behind us. The ecosystem is all working together and moving in the right direction. So it's a very positive environment for investment that is improved even more by this compelling upward momentum from the Internet of Things. Okay, so I'm going to hand it back now to Anne for a little bit about ChainLink research.
Okay, we're almost at the end. Start thinking about your questions, everybody. Just very quickly, ChainLink research serves both technology providers and end users, and of course the key question for solution providers is, what's my segment of the market? There's a lot of opportunities out there, but what fits for me? And ultimately, who am I selling to, and what's my value in that market? So we've focused very strongly around helping solution providers kind of walk that process, if you will. Next slide, please. Conversely, end users have a similar process. They're looking at it, though, from a business perspective. What are my business challenges? What kinds of technologies help me meet that challenge? And, of course, who will help me meet the challenge and who can deliver that value? So we help both end users and technology providers go through the process of defining and achieving their business goals in RFID. Next slide, please. Now, for us, as I mentioned, we serve both end users and technology providers, and we take people through what I call this wheel of needs, if you will, as sort of discovery and ultimate success in their business challenges. And for vendors, that also includes things like custom research, understanding end user challenges. And users like to know about that as well, because as we're going through and surveying end users, they want to learn from the best practices of other people. An overused phrase, best practices, but in reality it provides a guidepost for those who follow after the big innovators kind of crash through the gates. So if you go to the next slide. So in keeping with that, we've embarked upon an agenda going forward here. First, we're going to do a whole webinar series. We kind of hinted at some of those categories about tags, readers, the cloud, business applications. We are promising you all we're going to do a framework on the Internet of Things, because even people who sell Internet of Things applications are starting to sound a little cynical and saying, well, what really is it, right? So we'll be doing that. In addition, we have a whole series of research projects talking about solving the 6 infrastructure challenges, looking at market growth, both active, passive, looking at the business applications. And so we're hoping that you as a solution provider or end users would like to get involved in those research projects, and I really appreciate you following up with us on that. So next slide, please. So with that, I'd really like to open this discussion to questions. And so if you have questions, please put them in, and we will take them in order of as they come in here. So our first question is, and it's interesting because it's about RFID adoption and cost. So do you, and this is probably a question for Scott, do you see the volumes that you guys are predicting being able to further reduce RFID prices in the future?
Yeah, I guess in the area of tags, I would say I think we're going to see some steady improvement. And again, don't focus on the price of a chip or on the price of an inlay or the price of a label. Focus on the total applied tag cost. There's a lot of opportunity for innovation to make modest improvements across that whole chain, but in the end to reduce the cost when it finally reaches the end user in a deployed condition. And the other thing I would say is that we talked earlier about how the structure of the industry is shifting. You know, we have contract manufacturers building capacity in Asia. It remains to be seen how that's going to affect things, but I think it's going to allow there to be more efficient manufacturing across the industry. So I think you can expect to see steady improvement in pricing in tags over time. I don't see any step functions, just steady improvement. In terms of readers, really the volumes have been kind of small. If you compare the reader industry to the computer industry or the cellular phone industry, the volumes have been very, very small. We're talking thousands of units for some categories. When those volumes get into the tens and hundreds of thousands and even millions, there's a lot of opportunity for price reductions. People will develop less expensive chips. So I think you can continue to see a lot of opportunity for improvement there.
Okay. Next question is for Bill. You all talked about sort of vertical markets versus horizontal markets. Could you elucidate a little more about what really is a vertical market versus a horizontal market?
Yeah, and I'll probably invite Scott to step in on that one as well. But essentially, I think we're talking more about solution providers' approach rather than the market itself. So vertical would be companies that solving a specific problem and don't necessarily look at themselves as an RFID company. I think Scott mentioned Stanley Black & Decker who bought AeroScout. They're a tools company, right? And tools and systems and so forth. And they happen to use RFID to solve specific problems in their company, as opposed to someone who sees themselves as an integrator of these pieces to go out and solve problems for their customer. I don't know, Scott, if you got anything to add for that. I know time is short.
No, I agree with that, and I think that a critical point to make is that vertical solutions providers try to differentiate themselves, at least in part, on the basis of their deep domain knowledge in their customers' vertical category. So, if you're somebody like Terso is an expert in delivering healthcare devices to the healthcare providing industry. Somebody like Chronotrack is an expert on race timing. And yes, they have RFID expertise, but it's in the lab. Their branding, their positioning, their messaging is, we're going to make to the customer, we're going to make your job better. Whereas horizontal AIDC VARs represent themselves as experts in RFID and are basically answer the door whenever someone knocks on it saying, I need something that does RFID. And there's a fundamentally different business model between those two.
Right, and we have about 20 questions, so I'm going to tell our loyal audience who's been sticking by us is that we will answer all your questions by email if we don't get to all of them. One of the questions which I'll grab is about the impact of RFID and omni-channel. Well, briefly, and we've actually written reports, and we'll mail to the questioning person those if you want them. Anyway, it's a common problem whether you're in manufacturing or in retail, which is finding the one specific item desired, right? Whether it's a consumer looking for a new red pair of shoes, size 6, and what warehouse or retail store do we have them in, or I'm a manufacturer and I'm looking for a very specific tool or supply to fulfill a build order, right? Same problem. But the complexity of omnichannel, of course, is the transparency with the consumer, because today consumers can get on websites and they can check for availability, not only across your business, but across multiple businesses. So this is the new game in retail. Price check, availability check, location, commentary about the item, information about the item. Is it, gluten-free? Is it this? Is it that? All that information. So product management, or PIM, product management information, availability, all that stuff has to be wrapped around that item, and it has to be transparent and visible. That is probably one of the most dramatic changes that's taking place in retail. And again, we've written about it, we'll keep writing about it, but the impact, RFID, I think, is a cornerstone technology in solving that kind of problem. Yeah, there are other options, but they're more clumsy, they're not as accurate, and they're not real time. So I guess that's enough on Omni. There's one more question I think is really important, and this one I'll send to Scott. Form factors. You guys didn't talk a lot about the impact of form factors, really ultra-thin chips and very small chips. Could you talk a little about that?
So I'm not completely sure I understand the question, but ultra-thin chips and very small chips, if that refers to tag chips, I think.
Probably, yeah.
Yeah. So I don't know that I can speak with any expertise on ultra-thin, but what I can say is that there's some innovation recently in changing the standard formula for how to attach a chip to a tag. We wrote a report, Bill Macbeth wrote a report that's on the ChainLink website about Impinj's new R6 chip. And besides the usual bump in sensitivity and a number of interesting features, they did something different. That they changed the way the chip is actually attached to the antenna this time around. And so instead of the bumps and the particular type of glue that's used, and the particular formula on the Muhlbauer die attach machine, it's different. And I won't try to describe it to you, except to say that because it's different, it reduces the precision requirements that the Muhlbauer machine has to have. And so in theory, the Muhlbauer machine can go faster. And it also, my understanding is that it reduces the chance that the chip can be cracked or broken in handling, both in manufacturing and also in printers. And the upshot of this is that it increases field reliability. So, you know, when you're out there in the field and you've got a bunch of tags, tagged merchandise, tagged items, you know, some of those tags, some percentage of those tags aren't going to work. It's just everything on the planet has a field reliability issue. You know, some Dell computers don't work, some bicycles don't work, some cars don't work, some RFID tags don't work when they get into the field. This technology is going to reduce the field failure rate and increase the reliability, which makes the ROI, exception handling less, the ROI is higher, everything's better. So I hope that addresses the question.
Yeah, and by the way, and we'll write more about that in our, many of you are members of the MIT RFID SIG, and there's a few young companies out there are working on ultra-thin technologies and RFID and working on some very powerful use cases in security, document handling, and a variety of other applications in mobile and cellular and all that, and I think it's an interesting space. And one of the points that Scott made about the reliability and the malleability, you're starting to see things like woven RFID. I think Bill mentioned that earlier. I think this is going to be one of those powerful use cases where the woven tags are part of the textile and can be put in clothing through the life of the clothing, through the supply chain. And again, malleability, thin, not obvious potentially to the human eye, but can be functional not only for anti-counterfeiting, but for laundry and all sorts of things. So form factors plays a huge factor in this game, and I'm glad the question was asked, and we'll be sure from a research perspective that we focus on a lot of the questions that you all drive towards us. And on that, I just want to reiterate, because we are so in the penalty box and a lot of you still hanging on, but you know, we do want to end, and I appreciate you hanging in there longer. As I mentioned, your questions will get answered. This webinar is recorded, so if you have registered, you will be sent a follow-up email with a link. Send us your questions, further questions, because as a research company, we're really driven by what are the requirements of the end user and the technology audience, and we really appreciate your feedback on this webinar, as well as just things that you feel are important to learn about. And you'll be hearing from us specifically about that question shortly as we get into the next quarter in our research agenda, if you will. Thank you for attending our webinar, and thank you for the great feedback and the wonderful questions, and for attending. And on the behalf of Bill and Scott, and this ChainLink staff who makes all this possible. I'd like to thank you all for attending, and we'll be following up. Thank you, and have a wonderful day.